Edition of the London Session Open. Today is April 15th, 2020, and it's 9:45 a.m. in London when we are going to take a look at the markets. If you do have any questions, just put them there in the chat box, as you can see on the right of the YouTube video here. And let's begin then. If you're totally new to what we're going to do here is that we're going to take a look at some key markets. We're going to take a look at the Euro USD, GBP, dollar yen, crude oil, gold, DAX 30, and the S&P 500. And if you do have any questions, you can just put them in the chat box to the right, and I'll address them after we finish the main presentation. As well, if you just want to say hello, you're most welcome to do that. And as always, don't forget to like the video and also leave a comment if you're watching the recording, because it's really important for YouTube. Okay, guys, let's begin. And we're going to begin by taking a look at crude oil today. So crude oil is having a very, very bearish day. It's down by about 5.14%. And it's actually trading very close to the 2020 low of about 19.18, and that's obviously a significant difference compared with just a few months ago when we were trading closer to pretty much 56, and then we had this massive slide in crude oil prices. Now, I think what's happening here is just a continuation of what we saw yesterday, which is that people are not liking the new deal between OPEC OPEC and Russia and the US. But we need to look at it from this perspective. If all of these parties were able to agree to a deal when we're trading at $22 a barrel, well, if we would go down to $10 a barrel, which is sort of the next major level, then obviously there's going to be a higher incentive to do a deal at that level. So how did I derive 10.19? Well, we can treat this like some sort of a double bottom, some sort of a range where you have a low here from March 18th, followed up by another low here on March 30th, and another low on March 31st. At the same time, you have these highs are pretty much at the same level. So this sort of qualifies for a rectangle pattern. And when we take out this level, that can open up for further declines. So should we sell right now? Well, that's probably not a good idea, because I have a suspicion we're trying to shake out the weak hands. So we might try to just go down, maybe go down to 18, and then we might have a bit of a push to the upside. So what I would like to do is I would like to wait and see what happens here. If we close below here today, then tomorrow, if we have some sort of a pullback up like that, then we can probably sell and then target the lows. The 110.19 level is also quite interesting, because it's sort of the levels we've seen here in 1998, and it's also not too different to the levels we saw here in 1986. So we're at very, very low levels. Do I think we should be trading here? Not if we get a very good deal and they will cut production. But in the longer run, I think, for example, it's very unrealistic to believe they're going to be back at $100 a barrel, because back then you didn't have the same amount of production in the US as you have today. That has a negative impact. This slide in crude oil prices has a negative impact on stock markets. So you have the German DAX, which is down from yesterday's high. The market is down with about almost 3%, and the trend remains bullish for now. So I will continue to be bullish, and I think we can go up towards 10,080 at one point, and between 10,394 and this level here, I would like to be a buyer, because across all stock markets we've seen quite significant gains. Just to give you an example, this is the Nasdaq 100, and as you remember, we were bullish from down here for this to go upwards. Well, from this level, the market has risen with about 8%. So obviously at one point what needs to happen is that we need to have a bit of profit taking, and I think that is what's happening here. In the Nasdaq 100, if we go down to 83.69, I think people are going to be buying again with stops just below 80.68. For the S&P 500, I pushed up the buy spot a little bit to 2,730 down here. but I will remain bullish as long as we trade above 26, 24. So I think we can definitely go up a bit more. And I wouldn't necessarily buy in the Nasdaq, but maybe the S&P 500. You might even be able to focus on some of the other stock markets, like the French stock market and the Spanish stock markets, because we are starting to see those markets going up a bit, but they're not going up with the same magnitude as the US stock markets right now. But France is set to open on May 10th, some parts of their economy, and then you have as well Spain that already opened up slightly for a non-essential work, and we're starting to see those markets go a little bit higher as the market starts to price in the better times ahead. So gold prices, what's happening here? So gold prices yesterday, we actually reached a new 2020 high by taking out the high here from March 20. That happened early this week, but we pushed higher yesterday. But I think what's happening here is that you're seeing a bit of profit taking, and you're seeing the dollar doing quite good. So the dollar is up with 1.75% against the Aussie dollar. It's up with 1.5% against the New Zealand dollar. It's even up against the Canadian dollar. It's up against the Swissy. It's up against the yen. It's up against the pound. It's up against the euro. Because what's happening here is you're seeing market sell-offs and people going to the dollar in these situations, which we have seen over the last few weeks. So I think here that is probably what's driving this, and you're seeing a bit of weakness in gold because dollar strength. And from a technical point of view as well, buying gold up here at 1710, I don't find that very appealing, because the market, the last major low happened here on April 1st. So 15 days we pretty much pushed higher, up with 11.38%. Then we need a bit of a pullback. And down here between 1681 and 1640, I think people gonna be buying, and then probably gonna lift the price to the upside. All right, here's the euro. So the euro slid to support, and the market is pretty much here at 109.28. And because it's so early in the morning, I think this can continue to weaken over the next few hours or so. But as long as you trade above 108.89, I think this is a little buy spot. Again, it's just 9:52 a.m. in London right now. Many of the reversals will happen just after the opening of the US stock market. So you're looking at least 2-3 o'clock. And if we're still around these level, it makes sense. But yeah, we'll be a bit careful here because we can go a little bit lower. In the case of the GBP versus the USD, yesterday we're trading here, and I said if we can buy on a dip, and we went up instead of going down. Today I pushed up the buy spot a little bit earlier to 125.02, and I'm going to continue to be bullish here in this market. And I think as long as you're above 23, 24, 23, we're probably going to go upwards. Dollar yen, I'm finding it a bit difficult, but we applied Andrew's pitchfork here a few weeks ago, as you might remember. The idea was to sell here at 109.12 and around this level at 111.86, and then we went down, which was fine. That's what we wanted to see, and then we have that correction, and now we're going down again. And the pitchfork doesn't say that we can't trade lower, but it does tell us that if you want to have a good risk reward ratio, then you'll be looking at to sell at 109.02 with stop loss, which is probably above 109.55. So those are the main markets. Let's take a look a little bit at the COVID-20 figures. Italy yesterday had an increase of 1.9%. So that's not a large amount. In fact, it's the lowest level we've seen over the last few weeks. Number-wise, there's still quite a high numbers, 2,972 people that are attracted the virus yesterday, but percentage-wise, it's a low growth. France up at 5%. Their data is a little bit wobbly. Sometimes they have very low numbers, sometimes they have higher numbers, but overall going in the right direction. UK, they have some stable numbers that are slowly going lower, but we're at 6% here. And yeah, it probably is going to take a little bit longer because they enforce lockdowns later than many other countries until we start to go into like 2-3% or so. In the UK, there's no talks right now of when they're going to open up the economy. I mean, there's a bit of talk, but there's nothing firm. Whereas in France, May 10th is sort of the date they're probably gonna open up. In some other places, they already opened this week. But I think in the UK, they probably want to see these numbers drop even further before they do anything here. US numbers are really low at 4.6, which is really good. People-wise, though, still some very, very high numbers. 26,945 cases. And then you have Germany, sorry, Spain at 2%. They've done very good in Spain here. They keep these levels very low. Again, people-wise, it's still quite a lot of numbers, high stuff here, but from a market perspective, things are going good. And then you have Germany at 1.6. Germans are doing really good here. Yeah, they've done really good here. 1.6 is really some solid numbers. Even here, 2,100 people. It's not a huge amount of people for Germany. So what does this all information tell us? It tells us that we're going to look less and less on this chart going forward. And the reason why I want to look less and less on that chart going forward, because I use that chart to actually try to get a pinpoint on where stock markets would find a low. Well, the stock markets have found a low, and now these numbers, they can only go to 0. So the benefit of that is starting to get limited. And if you look at something like stock markets already, well, the Nasdaq 100, for example, it has recuperated more than 61.8% correction, well, more than 61.8% of its losses for the year. In fact, at one point yesterday, it was very close to the levels we saw from the beginning of the year. So the idea to use that chart is that you could use it as the numbers getting more and more aggressive, the market was declining. And as we had hit a peak in those numbers, we went up and up and up. And now we're starting to see people to price in the reopening of the world economy. And I think that will happen. And maybe when they price in, we need to be a bit more careful, because if we are at these levels, then we don't have a strong edge here, because the market is probably where it should be, given that the economy is going to open up in 3, 4, 5 months. And then the economy will probably be back to some sort of normal level, not as before, of course, but relatively okay levels. So the stock markets would be correctly priced in at that point. Okay, let me see. That's the wrong. Here we go. Let's see if you guys have any questions. We have Daniel here. Good morning to you. And then we have Marvin here as well. Good morning to you. If you guys have any questions, you can just put them in the chat box, and I'll do my best to try to help you. Even though, as you know, I haven't been able to help you very much lately because my 10 a.m. meeting every day on forced me to leave earlier than usual. Okay, so we don't have any questions for today. If you do have any questions during the day, as you know, you can always reach out to me via Twitter at AlexFX00. As well, don't forget to check out our content on investingcube.com for more on the markets and more timely updates. Thanks so much for watching. Have a great day, guys, and stay safe out there. Thank you.